Good afternoon, everyone. Welcome to SCB's analyst meeting for the quarter ended December 31st, 2021. And for this meeting, we will be sharing our results for the fourth quarter and full year 2021. Leading our panel today in person is Kun Manop, our CFO, Dr. Yan Yong, Chief Economist, Chief Corporate Banking and Wealth Segments Officer, and Kun Kriang, Chief Risk Officer. Right. Joining us online, we have also Kun Pikun, our Chief of SME Business Officer, Kun Ora, Chief of our Retail Business Officer, and Kun Charlie, our Chief Digital Banking Officer, Kun Poramasiri, Chief Insurance Business Officer, and Mom Chiradet, Chief Credit Officer as well. Right. So without much further ado, let me pass the mic to Kun Manop, our CFO. Kun Manop.
Good afternoon from Bangkok, and welcome again to SCB analyst meeting for the fourth quarter of 2021. So let me first ask Dr. Yan Yong, our Chief Economist, to give us an update on macro situation, in particular the Omicron situation that we're having right now globally and also in Thailand. Please, Dr. Yan Yong.
Thank you, Kun Manop. As everyone aware, we are focusing on the impact of the Omicron variant on the global and Thai economy. EIC is forecasting that the Thai economy will be impacted by Omicron. In our baseline, probably mostly the impact would be concentrated in the first quarter, especially in terms of the tourism sector. But overall, we believe we projected the Thai economy will grow about 3.2% this year, and gradually we will return to the GDP level prior to COVID, or the GDP level of 2019 by sometime at the mid-year of next year. Let me give you example. Give me detail of the analysis behind this assessment. As you know that the Omicron have spread widely and very fast around the world, but due to the vaccination rate that had been increasing around the world, so you see the discrepancy in the infection case, which continue to climb, contrasting with the yellow line, which is the death rate, which is remain actually low, and compared to the previous peaks, actually lower. And as a result, we expect that many governments around the world, even though they tend to tighten the lockdown measure as a result of this new spread or new outbreak, but we expect as on the right-hand side, the stringency index, which represent the lockdown, the tightness of the lockdown measures around the world, to be below the average of previous episodes. And we already heard that in some countries like UK already announced that they will relax the measure further. Next page, please. So if we look at the impact on the economy by looking at the high frequency data, I think the most of the impact will be felt mostly in the service sector, which representing here by the Google mobility, especially for the retail and recreation in a number of countries. And as you can see that after continued improvement from the throughout the fourth quarter of last year, which peaked around before the New Year time. But after the New Year, you can see that the Google mobility for recreation and retail have coming down. But if even it's coming down compared to the previous episode, is the shortfall still is much better than previous peak. I think that reflect, as I mentioned, vaccination rate in terms of lighter lockdown measure, but also in terms of the new normal, the way that people try to live with COVID. We believe that the impact will be less than the previous episode. On the right-hand side, you can see the PMI, the Purchasing Manager Index for manufacturing sector continue to do well, and that the underlie basically that support the export growth that we have seen throughout last year and will continue. We believe continue this year as well. Next page, please. So in terms of the global forecast for 2022, we are looking at around 4.1%, slightly slower than 2021 at 5.8, but at 4.1% is still higher than global average before the COVID, which is around 3%. Okay, so the growth rate is not bad for this year. But of course, there's still disparity between advanced and emerging market. As you know, last year, advanced economy benefit greatly from vaccination, that they have advanced vaccination, so they have a higher growth rate last year. So there will be a catch up by emerging market economy this year because of vaccination also catching up as well. Nevertheless, we still expect that there's still disparity between in terms of going back to the pre-COVID trend, as the middle panel, which we taken from the IMF forecast. You can see that for the purple line representing the advanced economy, most advanced economy as a whole, we expect the growth will, in terms of GDP level, will reach back the pre-COVID trend. While for the emerging market, the yellow line, will, even though this year growth will catching up, but overall because of the deep recession experience over, especially in 2020 and slower growth catch up last year. So there will be still a gap between pre-COVID trend and the forecast trend. Okay, but besides the growth level, which we our base case that we believe that 4.1% is quite satisfactory, but obviously one of the great concern that many people are monitoring very closely is the threat of inflation. As you know that inflation in this episode is come as a result of imbalance between demand and supplies, especially in terms of demand for goods in various items, especially in electronics, and so that create and while on the supply side there's a supply bottleneck throughout, and so there's a imbalance between demand and supply, and that create the pressure on price. As you can see on the middle panel, many countries around the world experience very high inflation. The one that people most monitor closely is the U.S. inflation, which now reached 7.1%, very high by historical standard, and that as a result, Federal Reserve have signaling very strongly that they will try to address this threat of inflation by I think the market, including EIC, are expecting that this year the Fed will hike around 4 times starting in March of this year. So this will be the environment of the global economy this year, with growth is continue to grow at satisfactory rate, but with tighter monetary condition and the threat of high inflation, that would be a key risk for this year growth. Now, what does this mean for Thai economy? I think we start from the first engine of growth, which export. As you know, last year Thai export have grown at very high rate. We forecast now that the last year we will end at around 16.3%. And from the table on the left, you can see that it had been a broad base recovery of export last year. For 2022, we are now projecting export to grow around 3.4%. Obviously, because of high base of last year, so 3.4% is not a bad number. It will be supported by, I think, continued global growth expansion. In Thailand also, we will likely to benefit from RCEP, which is the largest FTA or trade agreement, regional trade agreement around the world, because it concentrates with many large economy in the region, and so we should benefit from start to benefit from this agreement in terms of our trade performance. But obviously, the key risk factor are still many factors that we need to be careful about, especially in terms of the high cost of container and shipping costs, that as on the right panel that we show that is continue to, we believe with Omicron that will be exacerbated, especially in the first quarter of this cost. The next growth engine is the tourism sector. So as you know, the Thai government have opened up Thailand to tourism since last July, starting with the sandbox in Phuket and expanding to other area of the country. And late in fourth quarter of last year, the government started the Test and Go program, which means that people can, travel tourists around the world can register, and if they have negative test of COVID coming to Thailand with another additional test, if it's negative, then they can freely traveling around Thailand. We have seen the steady resumption of tourism sector in the fourth quarter. Obviously, because of the Omicron, the government had subsequently decided to suspend the Test and Go program briefly, but yesterday, actually, as of yesterday, the government have signaled that they will begin the Test and Go again by February 1st. So overall, we expect that the tourism number will slowly, gradually improve, especially in the second half of this year. So overall, in the base case, we are expecting the tourist number to be around 5.9 million. In our base case, is still much below the 40 million tourism in 2019. But I think it will, if we can reach around 5 or 6 million tourism this year, then that will certainly provide important boost to our tourism industry in Thailand. Now look at the domestic economy. I think the key indicator is to monitor the infection case, and as I show you the global number, even for Thai numbers, it follows similar pattern. Here we have set at the Delta episode in the third quarter of last year as a peak level. As you can see that even for the Omicron spread that we are experiencing, the gray line, which is the infection case, it's increasing, but it's much lower than previous peak, and the death rate, which is the red line, still stay very low compared to the Delta wave as well. And the reason for that is the steady increase in terms of vaccination rate. Right now, we have full dose of about 66% of overall population, and now the government very much focused on provide booster dose to the Thai population, which we expect that by the mid of this year, this ratio will be patrolled at about 80%. So that will provide very important protection for Thai population to at least have a new normal living with COVID. Given that background, okay. So if you look at the high frequency data, again, whether it's Facebook movement on the left or Google mobility on the right, you can see that actually in the fourth quarter, the number have improving steadily with the vaccination and resumption of traveling domestically. Actually, I think in the December number, occupancy rate of hotel in Thailand have reaching back about 40%. So that's a very good news. Unfortunately, because of Omicron, we have seen some declining in January, but we expect that this impact will be relatively short-lived. Should be able to address that and see some improving, sometime in late of the first quarter of this year. We are also expecting some pent-up demand boost for domestic consumption, and the reason for that is if you look at next page, please. Yes. Similar to many other countries, right? We have seen that over the past 2 years, there have been a jump in domestic savings. In Thailand, almost about 2 trillion deposit increase over the last 2 years. About 1.2 trillion is excess saving, the part of saving that increase above the trend. And we certainly expect some of these will be spent on after the opening. And when people have confidence to travel, to spending, which we already see in the first portion of this pent-up demand in the fourth quarter figures, and we expect after Omicron subside, then we should see some boost of domestic consumption because of this pent-up demand. But I like to note though that in Thailand, this excess saving mostly concentrated in among high income group with 90% of increase of saving over the past 2 years concentrated only about 2% of the accounts. So if we compare this to other countries around the world, then maybe it will be mostly concentrated in terms of the pent-up demand on the high income household. Okay. In terms of overall consumption, obviously we still need to address some of the scarring effects from the crisis. We've seen that the unemployment rate still increased. The latest number is still in third quarter of last year. So unemployment rate is about 2.2%. We also see that some of the employment become long-term unemployment, which the box on the bottom left-hand side, and many of the many of the workers have gone informal sector, economy and so we have seen the share of formal workers declining again after improving over the past 5 years, but now over the past 2 years. So this could be could represent some challenge going forward in terms of the labor market. And obviously one of the scarring effect that's very important is household debt to GDP. As you can see, the ratio have increased to around 89%, which is relatively high by emerging market standard. Will take, I think, at least 2 to 3 years in terms of deleveraging. So household will try to, maybe be careful in terms of their consumption, in terms of their spending, and try to increase their income. Another thing that we have noticed from the latest survey by the National Statistical Office is that we have seen the share of informal borrowing increase once again after many years that is on the declining trend. So this is signaling the need, financial need by many households that they tap on not only on the formal financial institution, but also even for the informal borrowing as well. Next. In terms of inflation, in situation in Thailand, I think obviously we are have been impacted by the high oil price. As you can see on the top left corner, the yellow bar, that's mostly inflation in Thailand have been on the cost push side, mainly from energy prices and lately by fresh food. But in terms of core inflation, it's still very low at about 0.3%. So I think the demand side pressure on inflation is still lacking as we know, because Thai economy still has not returned to the pre-COVID GDP level. So I think producer will be find it difficult to pass on the full increase of the supply side cost. So that I think overall we expecting the inflation still on the increasing trend. This year we forecasted 1.6%, but still within the target of the Bank of Thailand. Now, it's important engine of growth for this year still remain with the government spending as well. On the left-hand side, obviously the public investment will be a very important growth engine. We're expecting the public investment, especially for the construction project, to grow around 6% this year. And that should cloud in some of the private investment as well. On the right-hand side, in terms of government spending to stimulate the economy, I think one of the things that we need to keep a close eye on is that in terms of the injection of money, whether it's on through the budget spending, it will be a bit lower in terms of growth rate compared to last year. And in terms of stimulus, the 1.5 trillion baht stimulus, the government have already spent about 1.1 trillion, and at 1.23 trillion, so only 270 billion left for this year. But if government find the need to spending more, I think that with the lift of the public debt to GDP ratio from 60% to 70%, we calculated that the government should have room, about 500 to 1 trillion baht to borrow if necessary. So that, as a backstop to provide further growth to the economy if needed. Lastly, in terms of the monetary policy, we expect the Bank of Thailand will hold the policy rate at 0.5% throughout this year. As I mentioned to you, that inflation, even though it's going to be higher this year, but should stay within the range, the target range of the Bank of Thailand, and the Bank of Thailand will should focus in terms of provide support for the economic growth. And I think that what the Bank of Thailand been communicating with the market. Okay. So overall, we're projecting the GDP growth this year to improve from last year of 1.1% to 3.2%, with the improvement in terms of private consumption and with export and public investment as a main engine of growth for this year. As I mentioned to you, overall, it still means that the Thai economy will slowly, gradually improving, and will return to the pre-COVID level GDP sometime in the mid of next year. So these are the overall assessment that I'd like to share with you. Thank you.
Thank you, Dr. Yan Yong. Let me now spend the next 20 minutes or so to discuss financial results and business outlook. So this should leave us with enough time for Q&A session at the end. So first thing first, a couple of words to capture the key highlights of my presentation. I believe in terms of asset quality, throughout this crisis, I'm sure you have noticed that we have taken a rather conservative approach through prudent provision setting, qualitative NPL recognition, and also proactive customer assistance program that is well supported by data-driven risk monitoring system. Comprehensive restructuring program right now is on track. We started this program back in the third quarter of last year. So all in all, we expect credit cost to come down to a more normalized level in the year 2022, and overall NPL should stay below 4% for this year. Now, as for last year financial performance, we are quite pleased with our performance. We managed to return to very strong growth with multiple drivers coming in from investment gains, fee income growth, cost reduction, as well as lower provision. And if you have noticed, our operating profit for the year was in fact the second highest in our business history, on a normalized basis. So under these circumstances, we believe this is a rather solid performance for the year in 2021. Now, going forward for 2022, the strategy is to continue to grow fee income from wealth and bank card business, increasingly through digital channels in order to capture new customer base from upper mass market segments. So digital engagement will be very key for our strategy for this year and going forward. In terms of loan growth, we will continue to apply a flight to quality principle. So we will not be aggressive in deploying our balance sheet. We rather preserve our balance sheet and therefore capital for our strategic customers. And let's be assured that cost discipline will be at the heart of our management team. In the next few years, growth will be driven by new businesses at SCBX. However, for the purpose of today's discussion, we will mainly focus on the banking business, as the setup of SCBX is still very much an ongoing process, and we will unveil SCBX business plan and strategy at the appropriate time. Let me next move on to asset quality aspect. In terms of the loan under the relief program, at the end of the fourth quarter, the loan outstanding under the relief program dropped to 397 billion baht, and this is about 17% of our entire portfolio. Effectively, we are unwinding the relief program this year. So at some point in the future, we probably will stop disclosing this number. So with that, we have conducted a review of overall program effectiveness, and we would like to share some of the interesting statistics or data points from this analysis. In summary, a total of 920 billion baht of customer has ever received financial assistance from the bank over the past 2 years, since the beginning of the COVID crisis back in second quarter of 2020. So you see that the number of people, the amount of customers who receive the financial assistance is actually higher than 839, simply because throughout the program, we did have some new enrollments coming in. Of the 920 billion baht of the customers who ever received our financial assistance, about 7 to 8% has become NPLs at the end of the fourth quarter of this year, of last year. And this is quite consistent with our observation every quarter, where when we observe the payment profile of the customers upon the program exit, whereby we mentioned all along that the non-payment risk should be within a high single digit and not more than 10%. So customers every quarter when they exit the program, more than 90% still make payments in some forms or the others. So this has led us to believe that the risk of further deterioration in asset quality of the remaining customers in the relief program, namely 397 billion baht, should be rather limited. On a relative basis, though, we would highlight that retail portfolio is more at risk than the non-retail segment. We have highlighted all along that for the year 2021, the risk that we observed has shifted from SME segment in 2020 to retail segment in 2021. And increasingly, we are observing some increasing risk in the unsecured portfolio. But fortunately, unsecured portfolio made up only about less than 2% of the customers in the relief program. So that's very much sums up the relief program and effectiveness. Hope some of the numbers that we have provided to you will be useful for your analysis. Now, we kickstart the long-term debt restructuring or comprehensive debt solution to our customers in a manner that we can increase customer long-term survivals on a once and for all basis. And we believe that even with EAR sacrifice, we should be able to more than compensate that with ECL saving. Our latest estimate for the size of this comprehensive program is about 380 billion baht. This is roughly 20% below our initial assessment. And the reason for this is simply because our customers have improved visibility for their financial situation on the back of recovery in economic activities. So that's the main reason. But there are a small minor reason as well, simply because we also screened out some of the customers whom we believe will not make it to the end. So for this group of customers, which is a small group of customers within the 397 billion baht, remain in the relief program. We're going to let them eventually flow and to become NPLs. But we still continue to provide the short-term relief solution to them up until they cannot really survive. The way we restructure customers under the comprehensive program is quite selective and is based on detailed risk grading for their long-term survival. So under the blue color scheme, under the Bank of Thailand's frameworks, our restructuring approach mainly involves interest rate reduction in order to match the loan repayment profile with customers' ability to repay in the long term. And obviously that will involve payment terms extension. There is no principal reduction in our restructuring program. And obviously we will not allow NPL customers or customers already in the NPL segment to enter into this long-term restructuring. And our risk teams will continue to fine-tune risk grading system to monitor customers based on their ability to survive. And we have put in place early warning mechanisms in order for us to adjust or fine-tune our strategy going forward. Now, the critical question is that what is the impact to our P&L from this comprehensive debt restructuring? We did an estimate on the 380 billion baht of customers. Obviously, we already migrated to about 280 billion baht, primarily from the customers in the relief program into these long-term solutions. So our teams will continue to work very hard with our customers for the remaining 100 billion baht in order to complete and execute the long-term debt restructuring for the rest of the years. If we can complete the 380 billion baht of long-term debt restructuring within this year, we estimate the impact to be not more than 10 basis point decline in our NIM on an overall basis. And we believe this would allow us to be able to come back to a more normalized credit cost scenario for this year and perhaps going forward. Or at the very least, it will prevent us, it will avoid and allow us to avoid the so-called staging cliff effect, which imagine if we assume a certain percentage of migration to the remaining relief program, the additional required ECL would be quite costly. So all in all, we believe that this comprehensive debt restructure program should be able to increase substantially customer long-term survivals and therefore improve the asset quality or protect asset quality on our overall balance sheet. Now let me move on to digital business. Digital business has been something that we need to build even with SCBX. The bank itself also need to improve on digital engagement and grow digital products and digital revenue. We managed to grow digital revenue and digital loan substantially through various platforms. Our strategy has been always to adopt multiple digital platforms, but predominantly through SCB Easy and some smaller platforms under the subsidiary businesses. And for during this crisis, we introduced Robinhood, and we have gained significant traction, customer usage, and customer engagement. So our digital user right now, at the end of fourth quarter, has grown to 20 million users, and we, for the first time, announced digital MAU. Our MAU users has grown to almost 13 million users by the end of 2021. Digital revenue still make up a rather small portion in terms of our total P&L, but we certainly expect very strong growth in the next few years. And for this year, we certainly will ramp up the growth in the digital revenue. I have with you also our Chief Digital Banking Officer, but let me highlight key strategy for digital banking, and Dr. Charlie can help explain in more details in the Q&A session if you have any question with regard to digital banking. The strategy has always been to grow business through digital banking, and for this year, we really determined to bring our digital banking business to the next level. And we want to use digital capability developed by digital banking to capture new market segments, in particular for wealth and insurance business. And we are launching a new health ecosystem, Spring Up, in partnership with Good Doctor, and also working with various partners to create better customer engagement. So through this strategy, we certainly expect rather strong growth trajectory for our digital revenue going forward. You know, last year, digital revenue contributed less than 5% of our total income. For this year, we certainly expect that percentage to grow to high single digit. Let me now move on to 2021 financial results. As I pointed out early on, it is a rather solid results. Let me skip this summary page and go to the key financial data for 2021 and 4Q P&L. On a full year basis, total income for the year was 150 billion baht. It was up 4% year on year. Non-NII growing 15% year on year to 55.2 billion baht. And within this, we noted solid growth in both recurring and non-recurring income. OPEX was 1% lower, so that has really helped us in terms of CI ratio. And provision declined by 10% to 42 billion baht. And net profit, therefore, was at 35.6 billion baht, up 31% year on year. Turning to 4Q set of results, total income was 39.2 billion baht. It was up 8% year on year and 6% on a Q on Q basis. We observed solid growth in both NII and non-NII. For this quarter, we decided to add additional, basically top up 2 billion more to our provision for the quarter, simply as a precautionary measure against Omicron. You know, as Dr. Yanyong just mentioned, that Omicron may dampen the growth prospect a little bit in the first quarter, and you know, this top up just simply just to take care of that factor. It is not that we have observed any drastic change in the asset quality as a result of Omicron variant as yet. So net profit for the quarter grew 57% to year on year to 7.9 billion baht. Now, let me continue with key highlights in our P&L items. First, let me start with yield on loans and NIM. You'll see that both yields and NIM has ticked up in the fourth quarter versus the third quarter. There is some technicality aspect to this because of the comprehensive debt restructuring that we have embarked on in the third quarter and much more so in the fourth quarter. This has allowed us to take a more constructive view on customers' long-term ability to repay. And as a result, we wouldn't need to more or less discount the future revenue stream for this group of customers, which typically takes the form of accrued interest reversal. And we did lots of that actually in the third quarter. And that's why you saw some weakness in the third quarter in terms of NIM and in also the yield on loans. So this on a net basis had led to higher income recognition for the quarter, whilst the impact of ER reduction on the back of the comprehensive debt restructuring would be fully realized this year, not in the fourth quarter of last year. If you go into customer by customer segment, the most noticeable uptick would be observed in retail segment. So up 43 basis points. So this is very much as a result of the comprehensive debt restructuring, whereby we can take a more constructive view on the future revenue stream. One point that I would like to highlight is on the SME yield. Apart from the comprehensive debt restructuring factor, in fact, we also observe some yield improvement in the normal portfolio. The strategy for SME segment has been to grow existing customers and also to try to capture new good customers. And we have been successful in capture and adjust the product mix, adjust the portfolio mix in such a way that we have some improvement in the yield on the SME, continued improvement in the SME yields for the past 2 quarters. So that has led to the overall yield increase of 21 basis points on a Q-on-Q basis. Loan growth was 2% year-on-year, and on the 4Q basis, up 1% Q-on-Q. As we have pointed out all along, we focus on the quality loan growth rather than quantity. We want to make sure that additional loan that we take in would be of good quality and give us the right risk reward profile. So despite the fact that this is a bit below 3 to 5% target that we set for the year in the year 2021, we wouldn't be too much worried about that. But within this growth, corporate loan was basically about flat, down 1% year on year. We saw some positive, high positive growth in SME loans because of the soft loan program during the year, but also we managed to grow SME segment a little bit because we are working with existing customers and provide more loan to them to support them. Retail loans has been quite resilient. In fact, housing loan was up 4% year on year. Auto loan, some weakness, but because I think we are observing some increasing risk in the auto segment, and unsecured loan has been rather stable, up a little bit on a Q-on-Q basis, but on an overall basis is about 1% increase. So that's the picture on the loan growth. Now, let me turn to NPL. NPL for the year was at the end of the year was 3.79%, down slightly from the third quarter of last year. But the new NPL formation was actually increased a little bit from 3Q to 4Q. New NPL formation was 16.9 billion baht versus 15.2 billion baht in the third quarter. And most of the increase was from qualitative downgrade in the SME segment. The downgrade was about 3 to 4 billion baht. But we have some offsetting factor from our proactive approach to write off unsecured loan NPLs. So in the overall basis, percent NPL is 3.8%. As I pointed out early on that on a relative basis, the retail segment is more at risk than the non-retail segment. So in the fourth quarter, as we are approaching the end of the relief program, we actually let some customers to turn into NPLs. So that's why we got some NPL upticks for the retail segments. a little bit in the housing loans, and a little bit more in the auto loan segment. Whereas for SME, is primarily because of the qualitative downgrade. For provision, 12 billion baht for the fourth quarter, because we managed to top up 2 billion baht in the last quarter of the year as a precautionary approach, precautionary measure for Omicron. So credit cost for the year was 184 bips versus 214 bips in the previous year. And the coverage ratio is still healthy, 139% coverage ratio. Non-NAI growth was the main growth driver for us. So let me explain the non-recurring part first. The non-recurring non-NAI up 38% on a year-on-year basis, on a full-year basis. And most of the increase was coming from investment gains from SCB 10X, both mark-to-market and also a portion of it is realized gains. And this is not one or two deals, but it's actually coming across the overall portfolio. So this is the first year that we realize investment gains from our investment through SCB 10X in a meaningful ways. This is non-recurring by nature, but we have invested a lot of capital in the technology companies, in the new growth areas where we believe has very good prospect for the future and for the technology development. So we certainly expect more of these investment gains in the coming years, but they are subject to many external and uncontrollable factors. So we'll report this investment gain as it happens. On the recurring non-NAI basis, they are mainly driven by bank card business and wealth businesses. Bank assurance business was up 9% year-on-year. And wealth business was up very strong, over 30% year-on-year. And in fact, on a sequential basis, it was still quite solid, both banker and wealth management business. We will continue to grow these two fee incomes. But on the banker business, much more through digital channels. And also we have been working with our partner FWD to introduce more relevant products to our customers, and also which give us better commission rates and fee income. And for this year, we should expect a significant ramp up in SCB Protect, which is our subsidiary to capture the mass market for the insurance business. For wealth management products, for wealth business, we will continue to fully leverage our open architecture platforms, introduce good investment products to our private banking customers and also wealth customers. We will work with digital banking. Digital banking will continue to provide good support to grow the wealth business and also the bank assurance business to increase sales through digital channel. So on the wealth business, we certainly expect set the target to continue to increase our AUM and aggressively boost net new money to come into our business. So this will continue to be the main growth drivers for the business. For this year, though, if what Dr. Yan Yong alluded to at the beginning should be correct about some economic activities to pick up, in particular the second half of the year, then I believe we should see some growth to come in the transactional banking as well. So I think this will be the growth prospect that we are expecting for the non-NI bucket. OPEX seasonally up in the fourth quarter, 17.3 billion baht, which translated into 44% CI ratio. On a whole year basis, 63.5 billion baht, 42% CI ratio. I think this is a pretty good numbers, and we will continue to make sure that our cost structure and cost base will remain under control. We certainly expect some increase in an absolute basis because of the economic activities to pick up and some costs in relation to the setup of SCBX. But nonetheless, we believe it should be well within our targeted CI expectation. And as you notice, in terms of branch closure and branch streamlining, we managed to close down 93 branches in the year 2021. And the majority of that is actually the branch reconfiguration. We scaled down the area of the service point and just to turn them into express service points, which in the long run will give us cost savings and cost benefit. So I think that's the OPEX outlook that we are working on right now. Liquidity remains abundant. In the fourth quarter of last year, loan to deposit ratio dropped a little bit on a Q-on-Q basis to 93%, simply because the liquidity condition is still abundant in the market at the moment. So we will continue to make sure that we manage our cost of fund well in order to ensure our NIM is on track to the target. Capital position has never been stronger. 18.7% total capital adequacy ratio and 17.6% CET1 ratio. We resumed to interim dividend last year, and in terms of Bank of Thailand's regulation right now, the cap is 50% of net profit for the year. For us, dividend policy has always been not less than 30% of net profit for the year. So I think that's our dividend policy that has been approved by the board. In terms of strategic priorities for this year, obviously we will continue to complete the SCBX process. We expect that to be more or less finalized sometime in the middle of this year or maybe in the third quarter of the year. But for the banking business side, we will continue to improve the return on the banking business. We will grow digital, which means lower cost to serve, and improve return and lower the provision required through data capability or data and analytics underwriting. So that's the main strategic priority on the banking business. But as for the SCBX, as I mentioned at the beginning, we will come out with SCBX business plans at the appropriate time. Just to give you the time frame for SCBX timeline. So we expect the share swap to be finalized sometimes in April, and the dividend, the one-off dividend payment from the bank to SCBX to take place in the middle of 2022. So that will mark the beginning of SCBX so that they can deploy this excess capital from the bank to invest in new growth and businesses going forward. While we don't have the full business plan for SCBX, we want to highlight that we are not staying still. The businesses that we have already set up under SCBX are quite active in terms of growing the business or preparing for the new growth phase under SCBX. And in particular, SCB 10X, we also made many investments. Some of them is new investments, some of them are follow-on investments. And you can see that it is our intention to grow allow new technology capability and also to build a digital asset ecosystem. Lastly, financial targets for 2022. Loan growth, we continue to set our loan growth target at 3 to 5%. Net interest margin, we lower our NIM target from last year of 3 to 3.2% range now to 2.9 to 3%. So it really depends on how we conduct the long-term debt restructuring with our customers and the timing of the execution of the long-term debt restructuring. But as I pointed out early on, we tend to believe that 10 bips is the maximum impact that we should expect from the long-term debt restructuring. Non-NII growth, we up our guidance a notch from flat growth last year to low single digit this year. And this is basically the drivers are coming from banker business growth, wealth growth, and a little bit of the investment gains from SCB 10X. Cost to income ratio, we will make sure that it is within the low to mid 40s. NPLs, we believe with 3.8% NPL last year, this year, if anything, it shouldn't be more than 4%. So we tend to think that with credit cost cycle peaking already, NPL should be below 4% for this year. So for credit costs, we are guiding for the credit cost in terms of basis point to come down to a more normalized level, which is below 140 basis point. And our normalized credit cost level that we observed in the year 2019 was 130 basis point. Coverage ratio, we believe we should be quite happy with 130% coverage ratio. So that wraps up my presentation.